Last night, Bitcoin crashed to as low as $77,000 as the fear of a recession is looming over markets and the downside feels like it is not going to end. What's up guys, it's CryptoDave here with the top tier, and in this video I want to break down the most recent price action for Bitcoin, whether or not we could be finding a bottom soon, and whether or not we should be fearful with all of the downside and bearish narratives looming overhead. And guys, if you enjoy these market updates, definitely subscribe to the channel, tick the little bell, you'll get notified every single time that we post. Without any further ado guys, let's go ahead and jump on into it. So financial markets across the board are crashing, but why is this the case? What is going on that is making markets so bearish? For one thing, we have the Russia and Ukraine conflict, which has not seen a ceasefire since the last ceasefire was broken in 2022, and folks are very fearful that the tense negotiations between President Trump and President Zelensky of Ukraine could result in a continuation of this war that involves more than just Russia and Ukraine. So there's plenty of fear that a World War III is going to break out, and whether or not this is actually likely is yet to be seen, but whenever you have a fear of a major global conflict that involves most of the world's superpowers, it tends to put people on the sidelines more often than not. And I think something that would really help the dust settle would be to see a ceasefire between Russia and Ukraine where the two countries can work towards a peace agreement. All of that is yet to be foreseen, and I think that should that come through, things could start to ease up a little bit. Speaking of conflict, you also have the tariff war between the United States as well as Canada, Mexico, and China. A lot of imposed tariffs back and forth, kind of calling and raising like we're at a poker table. But we do have plenty of people that speculate that the tariff policy is actually going to bring inflation back to the United States, it's going to drive prices up, and it's going to temporarily disrupt the labor market. Regardless of who is right on their tariff philosophy, the fact that there is a lot of uncertainty and the fact that the economic data has yet to come through naturally as it takes months at a time, we just don't know what's going to happen. A lot of these uncertainties have revised the expectation of Fed rate policy. It was highly speculated that through 2024 and into 2025 we would see some aggressive rate cutting as the Fed had their sights set on easing monetary conditions, but with some sticky inflation as well as the aforementioned uncertainty around Trump's tariffs, it seems likely the Fed is going to take a wait and see approach, and thus we have revised the rate cutting schedule. So it doesn't look like we're going to get those super loose conditions that everybody's looking for just yet, and this is yet another reason that markets are not doing well. Now, beyond the politics and the economics, we can see this all reflected pretty clearly in the S&P 500. We have very similar market structure at present day to that of 2021 when we had the big COVID bubble and there was a massive influx of monetary stimulus and rates were essentially zero, and everybody could go out and speculate on the new hot company or the small shiny altcoin, and most of the time you were going to have some sizable returns. But the conditions are much different, and I think that this is a point in time where the reality of the economic conditions and all the uncertainty around the globe has finally caught up with price, and we're seeing this similar breakdown here with clear textbook bearish RSI divergence on the weekly time frame, very similar to what we had in 2021. You have a massive bearish engulfing weekly candle that breaks you below some of the previous some of the previous lows, and we had the same thing back in 2021. What happened in 2021 was, of course, a 27% bear market, so to speak, over the course of several months, and this tracked us down essentially to our 200-day EMA. If we were to see a very similar correction to that of 2021, I think that we would likely be coming down to this 4,500 point level on the S&P 500, at the very least interacting with this 200-day EMA. But of course, guys, this is all forward thinking out into the future, but I just want to put it on your radar that there are very clear and consistent warning signs that we have an equity bubble and that we might be heading into at least a temporary bearish phase for more traditional markets like stocks. Now, beyond all the external factors, we should look within the cryptocurrency market and understand that we do not currently have a hot narrative that is driving price and encouraging people to take that risk exposure. In early 2023, price was rising primarily because after the FTX blow up, as well as some of the small bank blow ups such as Silicon Valley, we did not see a full-blown recession. So the narrative that a soft landing was achievable, as well as the emergence of AI as the hot new narrative, specifically with Nvidia performing very well and carrying the stock market, we saw this narrative carry price action for a couple of months before entering a consolidation period. And then once again, through the last quarter of 2023 into the first quarter of 2024, price was carried primarily by the Bitcoin ETFs, the rumors and the news of the filing, the rumors that they would be approved, the actual approval, the actual launch, all of this carried price for several months before we eventually needed to flush and reset and consolidate for some time. Now, most recently, we had the Trump victory, which had a rally basically between August all the way through to his inauguration. This was the narrative that carried markets forward because we now had a president who was focused on crypto in a positive way, which was pretty historic, all things considered. But it's very evident that prices need a narrative to juice them up. And at some point, there will be a distorted relationship between the current bearish narratives that are driving markets down and the actual reality of just how bad they are. And maybe that presents us a nice buying opportunity, which we can go ahead and take a look at. But it's just worth putting on your radar that these narratives are clearly shaping markets, and it's something you need to be wary of, even as you find the opportunity in this discount range. And speaking of opportunity, congratulations, you have made it past all the bearish parts of the video, and now we can talk about a bit more of a hopeful perspective. And I'll first direct you, of course, to the Bitcoin Fear and Greed Index. Guys, regardless of what the narrative that is currently driving markets is, regardless of the emotions and the capitulation and all the mass liquidations, we know that there is a clear relationship between extreme fear and greed as well as the price of an asset. And for the past week or so, we have consistently been putting in scores about 25 or below, which constitutes extreme fear. So regardless of what's happening in the world around you, the objective rule of thumb is that when you have blood in the streets, when people are capitulating left and right, when it feels like the pain just won't stop, and everyone is in shambles, scrambling their liquidity, seeing what they got left, there is blood in the streets, and there is a fresh opportunity for those of you who have stayed patient. Now, another reason that I'm pretty optimistic here, despite all of the bearish narratives, is that we have a very clear bullish RSI divergence happening on the daily time frame, which historically speaking, and even just looking with respect to this market cycle, is a very consistent and accurate buy signal. And it's marked some local bottoms in the past. You'll see a couple times during our summer of 2024 consolidation, our bullish divergence came in, we had higher lows on the RSI, we had lower lows in terms of candle body closes, and usually these constituted pretty strong buying opportunities. We see it back again here in August of 2023 with the higher lows set on the RSI, the lower lows, even though it's a bit hard to see, on the actual price. And even back with our actual bear market bottom in 2022, after the FTX blow up, you stuck in a bit of bullish divergence, and it turned out to be a very strong buying signal. And now this isn't the only reason to go and buy an asset. This is of course not the only indicator that you should make a trade based on or that is going to make you bullish or bearish, but it's simply to suggest that it is a high probability signal, and it has worked for us in the past quite a bit to come into that oversold territory, usually at a point of capitulation in the market, and then you get that secondary bleed that kind of captures those lows. We can see this capitulatory candle here with a long lower wick, and of course we grab those lows. We stick in the higher low on the RSI, we stick in the lower low with respect to candle body closes. That is our textbook bullish divergence. And most importantly, it's coming here quite a bit above a suspected key level at $74,000. A lot of times what happens is you have a previous point of resistance, such as 74K. It's very easy to identify on a chart. So you're going to have a lot of people that are very thirsty for bids at this $73,000, $74,000 level because it's such an obvious retest of previous resistance acting as newfound support. And I'm not going to say that that can't happen. It certainly can, and if it does, it's very imperative to see the level act as support and to have that higher time frame structure in place. But the main point, of course, is while people eagerly wait for the $73,000, $74,000 range, it's more likely that the whales are going to front run that range, and price is likely going to at least have some temporary relief before eventually coming back down to this $73,000, $74,000 level. I'm not going to sit here and say whether or not this is the bottom of this current bearish period for crypto. There's certainly some more room to come down, and ideally, once again, you're holding that 74K level as support. However, we are seeing a very strong, historically accurate buy signal. There is a lot of pain, a lot of blood, a lot of fear, and a lot of bearish narratives that are owning the talk of the town. So I just want to put that on your radar that while all of the noise seems to be red alarms and you know what hitting the fan, this is the perfect opportunity to strategically and with proper risk management allocate yourself to the space. And guys, if you want to figure out how I'm doing it, you can do so with the link in the description below. You can join the Discord, get access to myself, as well as 20 other trading analysts across stocks, crypto, and Forex will help better your trading game. And until the next video, guys, I'll catch you in the Discord. Peace.